As we told you at the top of the show, it looks like a deal to reopen the government and raise the debt limit is almost done in Washington tonight. But this incident is just the latest in what seems like a culture of crisis in Washington. And because lawmakers on Capitol Hill look to be ready to virtually kick the can down the road into January and February, the country could be back in crisis mode before we know it. So the big question, as an investor, how do you handle your money? And to answer that question, we have brought in Ryan Tenhave, an advisor at Edward Jones. Thank you for joining us.
Thank you.
You know, we were just talking before this on this subject having to do with people worried about their money and how to invest. Have a lot of people been calling your office asking for advice?
Well, it's interesting, Sue. I think people have almost gotten used to this type of thing at this point. We've seen it so many times, but I think it's important to remember that Congress has raised the debt ceiling 79 times since 1950. 78 of those times, the markets had essentially no reaction. So we really can't predict what's going to happen with these types of things, but as an investor, you can prepare.
That's true.
So, you know, you can prepare by sitting down with your financial professional, making sure you're properly balanced, making sure you own high quality investments because those are going to be less volatile than lower quality. And, you know, most of all, just make sure that you leave your emotions at bay. Just kind of make sure that you don't let these short-term events affect your long-term goals.
Right, because it's out of our hands as investors, right? You have to wait and see what happens. Has the damage already been done to the economy with this? Now, we did see the markets rebound a bit today, up everything higher, hearing the good news in Washington about possibly reaching a settlement on all of this and getting the government to reopen. However, have we seen some damage to the economy on this?
Well, I think if you look at what we've seen, it's really been more of the same, slow and steady growth, and the numbers have been pretty consistent in that. So for long-term investors, it's been a good environment to stay invested, make sure they're properly balanced, and make sure that, most importantly, things are invested in a way that fits their goals and their risk tolerance.
And that, of course, involves talking with a financial advisor about that. When we say properly balanced, quickly, can you give us an idea of what that is?
To boil it down real basic, just make sure you have the right mix of stocks and bonds. Everybody shouldn't be 100% exposed to the stock market, so where you should be really depends on a number of factors.
Okay. Ryan Tenhave, an advisor at Edward Jones, joining us tonight. We appreciate your thoughts on this. We could indeed be dealing with this at another time, just a few months from now. So you're saying to people tonight, stay the course and be properly invested in a range of things.
Exactly.
Perfect. Thank you for joining us.
Thank you.